Hi, everyone. Today we have Chris and Michelle with WPS. They are a carrier in the Wisconsin market, and we're going to be taking a deep dive in the Medigap coverage, the Medicare supplements in Wisconsin. They are unique. The state has some unique rules and plan offerings. So Chris and Michelle are going to help break that down for us. Thanks so much for joining us, guys.
Thank you, Miranda. Very much appreciated. Again, my name is Christopher Schulte. You can just call me Chris. I am an associate account executive with WPS Health Insurance, which is currently the largest Medicare supplement market share Medicare supplement in the state of Wisconsin. So we have a lot of great plan options, but today we really do want to focus in on some of the differentiators and uniqueness that is presented in the Wisconsin marketplace. Personally, I've been in the Medicare world for almost 15 years, spent the first 8.5 years of my career really focused on 50 states plus DC, produced everywhere, really more MA and Part D focused, with a little bit of a Medicare supplements being dabbled in there. Since I came to WPS almost 7 years ago, it's really been a focus more on the Medicare supplement side. And because Wisconsin is so unique, there are just so many differences that make selling in Wisconsin maybe a little bit of a challenge at first, but once you really break it down to its bottom line components, it really doesn't look that much different than any other state that you've produced in. So I really look forward to having the opportunity to dive a little bit deeper, give you some of the nuances that are going to be in the Wisconsin plan options, and then answer any questions that anyone may have. So I really do thank you for taking your time to join us today, whether you're live or watching this later on recording. I really do thank you for taking the time and the investment and whatnot to go through the options. Michelle, do you want to go in and do a quick intro?
Yeah, thanks, Chris. I'm Michelle Heinrich, and I am on Chris's team. I'm an account executive for WPS, overseeing agents in the marketplace over Medicare supplement and Medicare space in general. I've been with WPS for about 20 years. 21 it was last month, so I've been here quite a while. Worked in various departments. Started, in customer support, moved to grievance and appeals. Some specialty teams I was on, and then landed in a few roles in sales, including group sales, marketplace, PDP, and thankfully now I just focus on the Medicare market. So we're really excited to work with you, getting to help you learn a little bit about Medicare in the state of Wisconsin, and Chris is going to do a great job with that. I know he will. He always does. And going forward, we're here to support you with any questions that you have, whether it be related to Medicare or just overall Medicare supplement in the state of Wisconsin. Thank you.
Thank you, Michelle. I do appreciate that. Dennis, I do want to thank you for joining us. If you have any questions, feel free to put them in the chat. Michelle will just keep her eyes on the chat, or you can ask me directly when we have a break, or if I know to stop and ask for any questions. So anything that pops into your head, just put it in the chat so you don't forget it. We'll make sure we can address that for you as well. If you are viewing this later, you can also email myself at Christopher, CHRISTOPHER, Schulte, SCHULTE, at WPSIC.com. By phone, I can be reached at 608-977-5673. So if you do have anything that pops up, maybe lingering questions after you go through this, please get them out to me. I'm more than happy to kind of bridge that gap and help build that knowledge base in the Wisconsin marketplace. So with that said, moving into kind of the core of what we want to cover. So I do want to give you just a little bit of a background on WPS, where we've come from, where we're going, just so you kind of see how we fit into the Wisconsin market. From there, really want to do a deep dive on what makes Wisconsin unique, particularly as it applies to the Medicare supplement marketplace. Like I said, there's a lot of different moving parts that you may not see in the other states, but at the end of the day, those all really boil down to maybe common plans that you've seen elsewhere, sold elsewhere. It's just a different way of building the Lego blocks or building the puzzle to get to the finished product. What's good for the client or for your prospective member is they have a lot of flexibility in how they design the plan. So they're not going to be paying for components that they don't want to pay for. And they're really just going to be paying for the components of the plan that they feel is going to be necessary or that they want to eliminate any of the risks that they might accept by not having those benefits. So it's the end game really isn't all that much different, but how you build the puzzle to that end game is where it's going to differentiate itself quite a bit in Wisconsin. Also with Wisconsin plans or Medicare supplements, keep in mind they are regulated by the OIC in Wisconsin, which is the Office of the Insurance Commissioner, whereas your Medicare Advantage, Part D, those are all going to be regulated by CMS and Medicare. So the state mandates that we are covering today generally are going to be exclusive to the Medicare supplement marketplace. Medicare Advantage plans, although may offer some of the same benefits as the state mandates, they are not required, as those plans are not directly regulated by the state department or the state Office of Insurance Commissioner. So just want to make that clear, and just kind of that defining line on how the mandates apply all the way down when you look at the different Medicare options that you'll have available. So my agenda, give you just a quick background on WPS. From there, we'll really do that deep dive into the riders and how to design the plans. From there, we'll get into the state mandates, what the benefits are to your individual prospect or member on a Wisconsin supplement plan. Follow up with any questions anyone may have. As I said, if there are any, feel free to filter those over to me at any time. So I'm more than happy to kind of fill those gaps and bridge across there for you. So a little bit more about WPS. We were founded in 1946 in the state of Wisconsin by the Medical Society. Really, we've offered our Medicare supplement plans, well, really senior plans since 1960. So we did offer a Century plan that rolled out in 1960, which was really geared towards the seniors in the state of Wisconsin. In 1966, Medicare became a federal program, as you're probably all aware. At that point, we did offer a Medicare supplement. And since then, we have been a CMS contractor to administer the Medicare Part B claims, payment providers, all that, provider payments, all that fun stuff. So we've really been on the forefront with the supplement and also in the background with claims administration and all that fun stuff. What really prompted our founding is after World War II, about 300,000 soldiers came back to Wisconsin, and there was really a need for affordable health insurance in the state. So that's really where the Wisconsin Medical Society decided to branch out and start WPS as a local not-for-profit company. We did operate under the Medical Society until 1977. At that point, they did spin us off. And to this day, we do still operate as WPS Health Insurance as a not-for-profit in the state of Wisconsin. Currently, we are the largest market share for Medicare supplements in the state of Wisconsin. So we've been a market leader, really focusing more on value and education over price. So we're not necessarily selling on lowest cost. We don't play the entity game where we come in and out as different entities over time to kind of play that low premium game to build those book of businesses that way. It's really been more of a focus on long-term sustainability, doing what we can to keep our claims utilization, our premiums in a place where it's sustainable more for the long term. That's really been our goal. We've done very well at maintaining that goal and look forward to a future of being able to offer a very sustainable plan in the state of Wisconsin. With that said, we did dabble in the Part D market back in 2006. So we kind of dipped our toes in the CMS regulated products. We did pull out of that market in about 2022. And shortly after that is when all the disruptions seemed to happen in the Medicare Advantage and the Part D world. So I like to think we kind of extricated from that market right at the right time. But with that said, where we have really differentiated ourselves is being the number one choice for Medicare supplement insurance in the state of Wisconsin. A lot of it has been more as a people-friendly company, really focusing on white glove customer service for our members and agents, which has allowed us over the last almost 60 years of offering a Medicare supplement plan to really have a definitive plan, a sustainable plan, one that people are driven to in the market, really based on a reputation as a not-for-profit and how we process their group insurance and individual insurance for those that were living in Wisconsin. Nine out of 10 of our customers say that they would recommend WPS to friends and family, and we are able to boast a 10-year rate history of 4.43%. So like I said, sustainability has really been our key focus. Currently, we have about 77,000 total members on our Medicare supplement plans. 73,000 of those alone are going to be in the state of Wisconsin. We do currently offer plans in 26 other states, though we really have always focused and just had our bread and butter in the state of Wisconsin. Most of our employees up and down the line are in Wisconsin. Those that are remote are going to be within the United States. So we really don't have any outsourced call centers, anything like that. So it just really kind of goes to our high level of support that we're able to provide our members and our agents all the way down the line. With that said, as you're probably aware with Medicare supplements in general, there's really not going to be any networks. Medicare does work as a fee-for-service system. So you generally don't have prior authorizations that you need to go through, no referrals, none of that fun stuff you need to do with some other options to go ahead and get care. So it just makes it a lot more seamless with Medicare and a supplement. Our supplement, as with most, are going to be guaranteed renewable. So as long as your client continues to pay their monthly premium, that policy will continue on in perpetuity. Coverage on supplements is generally going to be portable. So if you have somebody on a Wisconsin-based Medicare supplement and they snowbird or they move to Florida, Texas, Arizona, I know being in Michigan, you probably see a lot of folks that kind of move to warmer climes. They will have that portability to take their policy with them. So it does make that simplistic. If they want to move, they don't have any disruption to the coverage and the benefits that they're going to receive. If you have somebody on a Wisconsin-based plan and they leave the state of Wisconsin, but they maintain that Wisconsin-based plan, they will maintain all of the state mandated benefits through the state of Wisconsin. So the good thing is those go with them regardless of whether they actually currently reside in Wisconsin or not. They will go with them and they'll still be able to take advantage of it. Many clients that I've worked with through the years that choose a Medicare supplement over other options, they like the predictable cost. You know what your monthly premium is going to be. You generally know that you're going to have very limited out-of-pocket expenditure. So there's really not a lot of surprises that are going to pop up on Medicare with a Medicare supplement. And then in the state of Wisconsin, there is going to be additional preventive care coverage that really will help with other benefits that go beyond the original Medicare preventive benefits suite that they offer. So some really good things we're going to get into there. And then above and beyond that, there is going to be some additional state mandates in Wisconsin that are going to be very unique that will really help differentiate what is available and how supplement plans work in the state of Wisconsin. So moving into more of the hard line, how things work in Wisconsin. So the first thing is how to choose a Medicare supplement plan in the state of Wisconsin. We have 3 areas. Most carriers in the state of Wisconsin are also going to offer a 3 rating area regime for how their plans are priced premium wise. Personally, for us, we've really based this on the actuarial data, the utilization data in the areas of the state to make sure that our policies are well aligned with where claims are coming in and that our premiums are in a sustainable place across all 3 areas to make sure, A, we can continue to pay claims, but B, make sure we have enough revenue coming in to make sure that we can stay solvent. So we've really done a good job with focusing on this, but you will see that area 1, 2, and 3 across most of the carriers that are offered in the state of Wisconsin. Area 1, as you're probably aware, is generally going to be your highest cost area. So these, for a lot of plans, are traditionally going to be your more expensive urban areas where healthcare costs are higher. Maybe demographics have less resources, so there's more cost shifting from government programs from those who maybe just can't afford their medical bills. Fortunately, Wisconsin being a little bit unique, we actually found the opposite in the Milwaukee area, where actually the utilization was a little bit less. So we are going to be area 3, which is going to be A, the lowest cost area, but B, it's going to be one of the more competitive areas in the state. So it does give us at least a lot of opportunity in the major metro areas in Wisconsin with our Medicare supplement. Now, when you look at a Medicare supplement in the state of Wisconsin, there are going to be 5 different base plans that are available across the market. The 2 main ones I'll get to in a minute, but not shown on your screen is going to be a high deductible base plan. A high deductible base plan is going to work pretty much the same as what you might know as a high deductible plan G or a high deductible plan F. The riders are kind of going to be contained in the policy. They're going to have that annual deductible, which I think is currently $2,950. That deductible will come into play just as it does with a high deductible G or F in any other state. So not much that's going to be different in Wisconsin as far as how that plan is structured compared to what you might see in, say, Michigan or Illinois or any of these standard letter plans that you might be currently selling your plan options. So that's going to be the high deductible option. Currently, we do not offer that. Also, you are going to have a 50% cost share plan and a 25% cost share plan. The best way to look at a 50 and a 25% cost share plan is an L and a letter K plan. So they're going to work exactly the same as far as the basic benefits that are covered under that, but you still have the ability to add on all of the additional riders that would be available on the next screen for our Medicare supplement plans. So you still have a little bit of flexibility where you're not locked into just a 25 or a 50% cost share on, say, a hospital deductible or the excess charges and whatnot. So that's going to be the best translation for those. They're not very common in the state. I'd say overall it's under a 3 to 4% total market penetration for the cost share plan. So I don't want to spend a lot of time on those because they're just not really that common or that popular for folks that are going into a Medicare supplement. But for the sake of this, I do want to make sure you are aware that they are available. All the riders that they can add, the only one that is not going to be available on those 2 cost share plans is going to be the Part B deductible. Now, obviously, if they're not eligible for the Part B deductible due to their Part A and B eligibility dates or their date of birth, no worries. It's not going to have any impact on them. But for those that are grandfathered into the Part B deductible, the Part B deductible coverage, just know on the cost share plans, they will not have the ability to add that rider. So let me just put that caveat out there. Now, when we look at the 2 standard base plans, which are going to be really the most common plans that are going to be available in the state of Wisconsin, your base plan is going to be the highest coverage option. Now, when I say base plan, if I was to convert that straight up to a letter plan, it's quite literally a plan A. It's going to be all of the basic benefits that are laid out under a plan A, or that Medicare lays out that all Medicare supplements have to cover as basic benefits. So that's going to include your 20% after Medicare pays. It's going to include the first 3 pints of blood, skilled nursing facility. So all that fun stuff is going to be looped under those basic benefits. Also forgot to mention the per day hospital copay on day 61 through 90, 91 through 150, plus the additional 365 days that a Medicare supplement will cover beyond the Medicare inpatient hospital benefits of the per day copay. So that's how the base plan is going to work. And we'll get into on the next screen here how you can kind of supplement and make that more of a Cadillac or an all-inclusive option. The second option is going to be a base plan with Part B copayment or coinsurance rider. How that's going to work is once your Part B deductible is met, you cannot have the Part B deductible covered under the copay option or the copay coinsurance plan option. But just like a Plan N deconstructed in any other state, it's going to be very similar. They're going to have up to a $20 copayment for office visits and up to a $50 copayment for emergency room visits. As always, the copayment for the emergency room is generally going to be waived if they are admitted to the hospital within 24 hours for that condition. So that's really not going to be any different than what you may have seen in Plan N's, either currently or in the past when you look at the Medicare supplements. With that said, that's going to be the 2 standard base plans. Just want to check in if there's any questions so far as we go through here. Perfect. I'll take silence as we are good to. Oh, go ahead.
Nothing in the chat, Chris.
Thank you, Michelle. I do appreciate it. So moving on to the deconstruction point I made earlier, let's rebuild and reconstruct our supplement to make it look like a more standard plan that you might be used to. So when you look at supplements in the state of Wisconsin, there are going to be 5 riders that are generally going to be available for all Medicare supplements. Rider 1 is going to be the Medicare Part A deductible. Quite simply, it's going to cover that $1,736 deductible that you encounter for up to the first 60 days for any hospital stay. With that said, you know that that is not an annual deductible. So you do have the ability, unfortunately, you do have the ability to need to meet that multiple times a year if you have more than 60 days between hospital stays. So that 1736 very easily could become 3,500 or almost 3,500. From there, it could very easily become 51, 5,200. So it can be an escalating cost structure in their out-of-pocket that they may have. So generally, it is very common that folks will take coverage for the Part A deductible. The most common, obviously, is going to be the 100% Part A deductible, where that $1,736 Part A deductible is going to be covered in whole. I've been doing this in Wisconsin exclusively for almost 7 years, and pretty much all but maybe 5 to 10 total policies I've seen over the thousands that I've either entered or done myself for clients has taken that 100% Part A deductible. There is a 50% Part A deductible option available if they want to kind of half their premium on that component for the policy, and they want to know that half of that $1,736 deductible is going to be covered. So that will give them that ability as well. For those that are looking for a lower premium but want to offload some of that risk. Again, it's not common. Most folks don't take the 50% option. They really do focus on that 100% option because it does give them a lot more short and long-term, really less risk, or just less risk that they will need to worry about taking on if they are hospitalized. So that's going to be Rider 1. Rider 2, I don't want to spend too much time on, is going to be the Medicare Part B deductible. Quite frankly, folks that take this are going to have that Part B deductible covered. They do need to have a grandfathered situation to be eligible. So they either had to A, turn 65 prior to January 1 of 2020, or B, they would have had to have their Medicare A and B start prior to January 1 of 2020. Keep in mind that generally does include folks who went on Medicare early due to Medicare disability. So they will be eligible for that rider as well. It probably goes without saying the Part B deductible rider is going to be a dwindling benefit. As we get older, as the retirees get older, there's just going to be less people in the market for Medicare supplements that are even going to be eligible for that rider. So it's not really a hot button rider that I really want to focus on. Just want to give you that background there. The spread you'll see in Wisconsin on that rider is going to align much better with what the actual deductible is. So I've seen policies in other states for WPS for other carriers where that rider maybe is $40, $50, even $60 a month more, where it just makes no financial sense to have that rider covered. So it is going to be a little bit unique in that perspective when you look at the Part B deductible. There's generally not going to be that large spread. So it can be a little bit easier to sell, but really the benefit is going to be more of the convenience of having that first dollar coverage and not receiving any type of billing. So moving on from there, Medicare Part B excess charge rider, I would say this is a very common rider that probably 90% of our current clients do accept. Really, this is going to be more of your traditional insurance. Most providers are going to accept Medicare assignment. As you know, there are exceptions. There are providers who just want to be non-participating. They're willing to accept Medicare, but they don't like what Medicare is going to pay them. Good for them. By law, they're allowed to charge that 15% above the Medicare payment rate. Well, most folks see the value in having that rider or having that benefit covered, so that if they do need to go to, say, a Mayo Clinic or maybe a very specialized care clinic, for they have a chronic condition that is just very special, not special, but it's very unique. It's not common. There's only a handful of specialists. Well, maybe they want a world-renowned specialist in that field. So it's possible that those specialists are just not going to accept Medicare assignment because what they're doing is going to be specialized. Maybe they have higher cost structure than what Medicare allows. Whatever their reasoning is going to be, by law, they are able to do that. So this will cover that benefit for them. Make sure that they are not passed on any balance bills or additional out of pocket that they will need to worry about meeting or be surprised with. So like I said, about 90% of people do take this. I do normally recommend it just because it does give them that extra protection. I kind of word it as if you have a $100,000 bill after Medicare pays, 15% of that can be $15,000, or 15% of a large amount can still leave a large out-of-pocket expense. So it is a pretty big peril that most likely, but does have the risk of encountering, and it just really kind of helps keep that manageable. And just one less thing they have to worry about if they do have a chronic or a major health condition that does require very extensive health care. So that'll be rider 3. Moving into rider 4, this rider will not translate to any other policy or letter plan that you may have sold in another state. This is going to be unique to just Wisconsin, and this is going to be for additional home health care. Quite simply, and I'll touch on this just a little bit later as well, but quite simply, when you look at the additional home health care rider, the state of Wisconsin mandates that your Medicare supplement covers 40 home health visits per year. So gratis, no cost, whatever you want to call it, they will have 40 home health visits per year under the Wisconsin state mandate. Hard stop, they do have the ability to add on the additional 325 home health visits each year for a very nominal charge. It does run, like for us, it's about $2.04. It normally doesn't change their budget too much when they look at the Medicare supplement, but it just does ensure if they do need rehab or continuous nursing in the home. Maybe their doctor will certify their homeboundness or certify their need for home health care, but it does not fall under the traditional Medicare scope. That's where the state mandate will come in and pick up those benefits. So if they really want to have the ability for one visit each day of the year, adding this rider can be a very good option. A lot of folks will take it, in all honesty, just because it is a very low cost rider. It like I said, it doesn't really change the calculus of their budget or what they're doing. So but it's really just to bridge that gap from 40 up to the 365 days in a year. So it's kind of maximizing that benefit for them if they need, say, if they are need rehab or skilled nursing, whatnot. So just keep that in mind. Rider 5 is going to be the foreign travel emergency standard benefit. 80% of the bill charges are going to be covered by the plan, and they will pay up to the amount that Medicare would have paid for that service. So it is based on the Medicare fee schedule. As you're probably aware, it is they pay up front. They submit the claim to their carrier for reimbursement, and then the carrier will reimburse them directly for those medical services. But it'll pay 80%. There's a $250 per occurrence deductible. And then they will have a lifetime maximum benefit of the standard $50,000. I do want to point out directly with WPS, we did double that lifetime maximum benefit up to $100,000. So standard in the state is still 50, but we did expand that to 100. Discounts, we personally do offer a 2% ACH or automatic bank withdrawal, as well as a 7% household discount. In the Wisconsin market, really your two most common discounts are going to be some type of household discount as well as an automatic bank withdrawal discount. And those discounts do vary quite a bit from carrier to carrier. So just know if you are selling in Wisconsin, whether it's WPS or another carrier, just to make sure that you're getting those discounts applied, to make sure you're getting the lowest possible cost structure for your client or for your prospect. To build up the policies into like the standard letter plans, I do want to present what's on the screen here. So when you look at like a Plan F, A Plan F is going to be the standard base plan in Wisconsin. You include the Part A deductible coverage, the Part B deductible coverage, Part B excess, and the foreign charges, or the foreign travel emergency benefit. Home health care, again, does not directly translate into a letter plan, and that's largely just going to be because it's unique to Wisconsin. So you can construct an a la carte option in Wisconsin up to a letter plan, or you can deconstruct it down to its base plan and additional riders. So depending on which way you want to look at it, you can definitely translate the policy up and down based on what you're familiar with or what you're comfortable with. At the end of the day, the advantage to your members is they have ultimate control over what they're paying for and what they want coverage for. They're not paying for any components that they don't want coverage for. And maybe they want a plan N, but they want coverage that's not going to be offered in the plan N. So it at least gives them the ability to kind of match what they want with what the market is offering. As I mentioned, basic benefits are going to be laid out on your screen. Just like in Michigan, the basic benefits are mandated across all Medicare supplements. So there's really not going to be much of a deviation there. This also shows the individual riders up and down, which we did cover. So the Part A deductible, home health care, Part B deductible, excess, foreign travel, 50%, as well as the 100% Part A, and then the co-payment co-insurance options. So the policies do generally offer the copay as almost like as a rider, even though it is presented as a base plan. So don't let that confuse you. It really all builds the same. You're still selling it as a base plan with copay co-insurance, but when you look at quoting and certain things like that, it may look more like a rider. So that'll help you just kind of work with the Wisconsin plans as well. Going back to the letter plan, so most commonly your Plan G is, if you want to build it up in Wisconsin, is going to be basic plan benefits, Part A deductible, Part B excess, and foreign travel. So really the only difference, as you already know, is going to be that Part B deductible. And then with the Wisconsin riders, like I mentioned, the Plan N, you can have it built just like a Plan N that you see on your screen, but maybe you want the excess charge rider on there. And you can't get that in Michigan with a Plan N. At least you have the flexibility to go ahead and add that rider on. So if it helps with translating the letters, I hope that gives a little bit more of a kind of an overview of how they translate up and down. Just to make it a little bit easier in your mind to mentally prepare for a Wisconsin plan. One takeaway I've learned selling in the Wisconsin market is Wisconsinites are very, dare I say, territorial. It's definitely like a one of us type of situation. So when they talk to agents, they don't necessarily like to hear about letter plans. So it does help as an agent to have as much knowledge on the riders and how they build up, so that you can speak in quote unquote Wisconsin lingo, because some people are very territorial about that, and it can create additional barriers to your sale. So understanding exactly what the verbiage and how the supplements translate up and down is going to be very beneficial to selling to prospects in the state of Wisconsin. So I hope that helps as you kind of build it mentally. I do want to go into state mandated benefits that are going to be required on Medicare supplement plans. So that's going to be the next point of emphasis that I really want to focus on. Before I do that, are there any questions out there that I can address for you?
Nothing at all in the chat, Chris.
Chris,
Awesome.
just
Thank you,
curious,
Michelle.
will you be touching on like the quoting and enrollment process?
Yes, that would be very WPS specific, but I'm happy to do that as well.
Yeah, I would just be curious. I really love I'm learning for the first time about how these Wisconsin plans work, and I'd say build your own plan approach is really unique and I think beneficial really to individuals and members. I mean, they truly can pick what they need. I'm just curious cost wise, how something like this compares to a traditional G versus building a G, for example.
Sure. Miranda, let me ask you a question. I just shared on my screen a like a rate calculator. Are you able to see that?
Nope, I'm still just seeing the presentation.
Okay, give me 2 seconds. Let me just change what I'm sharing on my end real quick here, and then I can just run through this quote tool real quick.
Okay.
And hopefully this will help put it in a little bit further perspective for everyone. All right. I think I fixed that. Is that coming through better?
Oh, yep, I see it.
Perfect. So this is going to be our unique supplement plan quote tool. In full disclosure, I don't necessarily know how other carriers have that structured, but this should at least be able to give you a better perspective on how premiums are not manipulated, but created, and how you can really build out the plan. So in Wisconsin, most policies are going to be gender rated. So male, female, obviously males are generally going to be higher in retirement, where females are generally going to be lower. WPS does have that same perspective. So just about all the policies you see in Wisconsin are going to have that rating methodology with male, females. Effective date, let me just put one in here real quick. And let me just do this for a turning 65 individual, just to kind of give you what a new business turning 65 individual would look like. Hey, Michelle, what's your zip code there in Jefferson County?
53038.
Perfect. Eligibility, you can kind of pick and choose. If they became Medicare eligibility after 1/1/2020, we can exclude the Part B deductible, or if it was prior to 1/1 of 2020, it'll allow them to select that Part B deductible. I want to focus more on the non-Part B deductible just because that's going to be more common. Also, just like you see in pretty much every state, disability or those on Medicare under the age of 65 are obviously going to have a much higher base premium. So just keep that in mind if you do encounter anyone under the age of 65, that they still are going to be looking at a kind of an inflated premium versus what the 65. And for obvious reasons, that's going to be more adverse selection that under 65 age group. Generally, they're on disability because, well, they're on disability. So they may have more chronic health conditions. It's just a higher cost to administer care to that population, which does translate into what the premiums are. But again, I would not expect that to be much of a differential from what you may see in Michigan or other states that you're producing in. So when you look at like the standard base plan, you can see in area 3 for at least Jefferson, parts of Milwaukee, parts of Waukesha County, this is going to be just the base plan. Again, when I say base plan, I'm quite literally talking about a plan A with the ability to add on additional benefits. So Part A deductible rider, they can have that covered at 50%, which you can see that adds $15.31 to the monthly premium. Or most commonly will be that 100% Part A deductible option, which is $31.23. So it's roughly double, give or take 50 cents or whatever the differential is, but it's roughly double. So that is how the Part A deductible rider will kind of show on our quoting and how it builds up. Part B deductible rider, our Part B deductible rider, and I'm not going to have it displayed on the screen, but we charge $21.41 a month. The Part B deductible rider, the Part B deductible currently is $283. I'll let you do the math just to kind of see where the swing is. It's a pretty small margin on either side of the equation, so there's not really much of a cost savings, but at the same time, it really is more of a convenience if somebody just wants that first dollar coverage. So just keep that in mind if you do have somebody inquiring about the Part B deductible. Obviously, they have to be eligible for it to even add it. But the co-payment co-insurance rider does work almost like a discount on the policy. So when you sell a plan N, you're just going to have a plan N rate. Whereas in Wisconsin, you're going to have a base plan, and then that co-payment or co-insurance option is going to reduce the premium. This amount does go up as they get older, since almost all policies in Wisconsin are attained age. So the premiums do increase year over year as they get older. So that factor or that premium reduction will increase as they get older as well. So just keep that in mind, that benefit does kind of grow as the premium goes up and the policy goes up in cost, obviously, as they age. So you'll see that premium reduction included in the quote if they want to go that route. For the purpose of this, let me just go with a standard base plan. Part B excess charge rider is normally going to be between like $6 and $8. As they get older, it can get up around 12 to 15, especially as they get into their 80s and potentially into their 90s. But that'll cover any of those limiting or excess charge riders that can be common in the, not too common, but in the Medicare space if you do come across those. Additional home health care, as I mentioned, is going to be $2.04 a month with us. So it's really not overly expensive. A lot of folks do take it strictly on the fact that it isn't going to change their budget, or they're not going to manipulate their finances to add it. So that's generally a pretty easy sale, just from the standpoint that it's not going to affect their budget much. Foreign travel rider, we do have that at $1.53. So again, very small cost. If you have a client who did not take the foreign travel rider when they are initially enrolled, and they do elect to add that later, I know with us, we do not health qualify for that rider. It is possible that other carriers may, but I do not believe most carriers in the state do health qualify for the foreign travel rider. Michelle, do you have any other insight on that, just with your experience working with agents a little bit longer than myself?
No, not really. I apologize. I don't.
No worries. So yeah, generally health qualification is not going to be needed because you're not necessarily taking on an adverse risk. It does have to be an emergency situation. And as we all know, generally emergencies are not something we plan for. So that'll generally be available without health qualifying. I know for us, we do charge a $25 admin fee if they do add it later. So there is benefits to adding it at the point of sale, but not to shoehorn them in if they don't want it now, they don't think they're going to be traveling. Just know that that is available for purchase later. I know with us, it's quite simply just a phone call or an email to our billing team or one of our account executives here, or associate account executives. So it is pretty easy to add, and then they'll just add that $25 on to the next billing period. As I mentioned,
Hey, Chris, I will mention something on that, though. I hear from agents all the time. WPS is so easy to work with that when they are adding a rider, it's great that they can just call or send an email, where other carriers do require an application coming in. So that is something that I hear quite often.
Oh, really? Well, thanks for that. That's actually great information,
Yeah.
Michelle. I appreciate it.
Yeah.
I was going to know that. Perfect. Well, thanks, Michelle. I do appreciate that. From there, we'll get like a standard base premium with all riders. When I say all, I'm either referring to 4 or 5, depending on their eligibility. So this will be kind of a top line premium for somebody in Area 3. Household discount, again, will add an additional 7% discount. Most carriers in the state do offer that as a multi-insured, just meaning they have 2 members on their supplement plan within the state of Wisconsin. And then some carriers like WPS do offer that, provided they meet certain conditions. For WPS, we do also allow the household discounts as long as they have somebody else in the household who is age 60 or older, and they've resided in the same residence for the prior 6 months. I kind of jokingly say, I don't care what their relationship is. They don't have to be family. They don't have to be husband, wife. They don't have to be brother, sister. They don't even have to be friends. They don't even have to like each other. It's just simply they're both over the age of 60 and they reside in the same household. So not too many questions asked on that one. It's pretty simple to get that added as long as they have somebody over 60 in the household. And let's be honest, 7% is a pretty nice reduction in premium for pretty much anyone on a Medicare supplement. Another common one is going to be the ACH discount, where they're automatically deducted from a checking or savings account. We do provide that at a 2% discount level. So again, it's just an additional cost savings. As I said, it does have to be a checking or savings account. Quite simply, we take the credit card processing fees and sending bills and all that fun stuff. We just pass along those savings quite simply. So it allows us to save costs. We're able to save those costs or pass those savings along directly to our members through credit card processing fees and mailing of bills and all that. Since they all do have a little bit of an added cost, we're just able to add those savings. I'm not aware of too many carriers that offer a discount based on the billing frequency. I know for us, it quite simply is whether they have the ACH discount. If they set it up directly through the checking or savings, But most policies will allow monthly, quarterly, semi-annually, or annually. So probably nothing too groundbreaking on the payment, kind of the payment cycle or the payment options timeframes that are available, but just want to put that out there. And you can see these two discounts do drop the premium from 190 down to 173 and some change. So it is a pretty good savings that does amount in this situation about $17 a month. Obviously, as they get older, that differential is going to grow. Just as obviously premiums will go up as they get a little bit older and have more experience on the policy. Miranda, does that help with kind of seeing how quotes are broken down and how you may sell with the quotes in Wisconsin?
Yeah, absolutely. That makes perfect sense and reasonable, but comparable price wise, for sure. Thank you.
Perfect. Does that make that kind of clear how this would translate into a letter plan if you just wanted to compare it to another state?
It does, exactly. That's exactly what I was looking for. That's perfect.
Perfect. Well, thanks for that opportunity. I'm going to go ahead and go back to my main screen. Are there any other questions before I proceed?
No, not yet.
Perfect. Thank you so much, Miranda. I do appreciate it. All right, so let's move on from plan structure and let's really focus more on the Wisconsin state mandated benefits. Again, these are going to make Wisconsin extremely unique compared to almost any other state or the District of Columbia that you might sell it. The first thing I do want to point out on the Wisconsin state mandated benefits, these do not apply to Medicare Advantage plans. Medicare Advantage plans, as you're probably well aware, are regulated by CMS, whereas Medicare supplements are regulated by the state OCI or the Office of the Insurance Commissioner in the state of Wisconsin. So Advantage plans do not have to meet these mandates, although some will just organically through plan structure. Whereas Wisconsin, their supplements are regulated by the OCI, and they do need to meet these requirements to be able to sell in the state of Wisconsin. Wisconsin-based plan participants most commonly will take advantage of the preventive care benefit you see in the bottom right-hand corner. We chose to highlight the state mandates that MedSups cover a minimum $120 in preventive benefits each year. Hard stop, that is the minimum requirement. Each carrier can go above and beyond the minimum requirement, but they have to at least meet the minimum. Some carriers do elect to meet just the minimum. Some carriers have another arbitrary cap that they put on it, say $300, $250, $500. Or in the case of WPS, we really don't have a hard cap on what we offer for the preventive benefits. So we've kind of chosen to go above and beyond and really make this part of our overall value structure in our policies. So like I said earlier, selling in Wisconsin is going to be a little bit unique. You don't necessarily want to focus on the cheapest option because the cheapest option may actually have a differential in what's being offered benefit-wise that can actually have other impacts on what they're paying out of pocket as they traverse the year. If you have somebody that maybe is getting a routine physical, they're getting a routine eye exam, if they're capped at $120, they still may have to come out of pocket for $300 to $500 for those visits if they still want to get those done throughout the year. So it can kind of equate in how policies look. So the first thing I'll say is when you sell in Wisconsin, it's not just the core benefits that you're going to see where it's like, hey, a supplement is a supplement is a supplement, or a G is a G. Although there is some truth to that, it's a much deeper and nuanced conversation than what you may have. It's not just carrier A is $200 a month, carrier B is $190 a month. The benefits are the same. Let's go with the $190 benefit. That is not necessarily always true in Wisconsin. So the best thing I can recommend selling in Wisconsin, just make sure you understand how each policy works and what the differentials are going to be, because a lot of times those differentials can really justify differences in the overall value proposition in the market or what the plan is offering. So just keep that in mind. And it is a very important distinction between carriers when you are selling in Wisconsin. As with as with all carriers, not the lowest cost plan is not always going to be or may have diminished benefits. So don't always focus on low cost. You may find that the value prop plan or plan with additional benefits may actually have lower estimated costs for the year. So I would put it as selling on price in Wisconsin can just be more nebulous than maybe your more traditional Medicare states. Preventive benefits will normally include, at least with WPS for sure, routine hearing and vision exams, routine physical, as well as the corresponding routine blood work. So those are going to be the main benefits that I've seen people take advantage of this. The key takeaway for these benefits to be paid by the MedSup provider or carrier, the carrier does need a denial from Medicare. So it is imperative that the policy holder make sure that that provider can and will bill Medicare for these services. I know for us, we cannot pay on it unless we get a denial from Medicare. The good news is the preventive benefits are normally going to be crosswalked automatically from Medicare to, say, WPS or the Medicare supplement carrier. So there's not really any other steps that your client will need to use or do to take advantage of these, other than make sure the provider will bill Medicare. Sometimes providers will bill Medicare for, say, your vision exam, but they'll attach a diagnosis code, which in turn Medicare covers that. No worries. Worst case scenario, this will just fall under Medicare Part B. The state mandate will not come into play, and they'll have just either met maybe $80 of the Part B deductible they won't have to meet later, or they've already met the deductible and they're going to be covered anyways. But assuming there's no diagnosis code, this will just fall under the state mandate. It'll be paid, and it's, like I said, it's pretty seamless for the end user on the policy. From there, a lot of folks do take advantage of a routine physical. Obviously, Medicare does cover a wellness to Medicare exam each year, which, as you're probably aware, is quite simply a medical lifestyle questionnaire. It's not tapping on your knee to check your reflexes. It's not routine blood work to see if maybe blood markers are showing indication of chronic illness or illness. It's really just going to be that lifestyle questionnaire, a quick conversation with the doctor, and they're out of the office. So they'll be able to get the head-to-toe physical. They can still take advantage of the wellness exam and the intro to Medicare exam if they would like to. Maybe it's somebody who wants to go to the doctor, quote unquote, free twice a year. Maybe they go once for the wellness, 6 months later, they go for the physical. They can kind of play that game however they choose, but just know they will have both of those options available, since one falls under Medicare scope and the other one will fall under the state mandated scope or the state mandated benefits in Wisconsin. So that's going to be the preventive care, especially if you have folks that get the eye exam. Maybe they might need a hearing aid. Just knowing that those are going to be covered if they bill it to Medicare, it does give them the ability to stay on top of their eyes. As you're probably aware, vision exams can uncover diabetes. They can cover many other issues that are not just specific to the eye. I know people maybe with heart issues that have been discovered through the eyes, diabetes. Everything in our bodies is all interconnected, and the eyes really are a good gateway to that. So it really just kind of helps them stay healthy in the long term as well. Moving on, the state does have an expanded mandate for chiropractic care. In order for the state mandate to kick in for chiro, it must be medically necessary, meaning maintenance and convenience items will not be covered. The carrier generally will require an active treatment plan after so many visits to continue having those chiropractic visits covered. So it does have an end. There is kind of an end game to it. There does have to be an active treatment plan with kind of an end game where the treatment is going to lead them to at least allow them the coverage. Like I said, medically necessary is always going to be the key word. A lot of carriers in Wisconsin were paying above and beyond the policies due to increased utilization. More carriers in Wisconsin are sticking to the policy. Not that there's been a change in the actual benefits, but just know that it's been a little bit more contentious. So they do want to make sure they have an active treatment plan. They're not going in for maintenance care and expecting it to be covered, because that is not going to happen. But this is additional coverage because, as you're probably aware, Medicare only limits it to manual manipulation of the spine to correct a subluxation. So it is going to provide more of a benefit that you will see with just Medicare. Again, the home health care rider we described earlier is unique to just Wisconsin. Again, we have to cover 40 home health visits per year, whether or not they have the rider. But if they want 365 total visits to be covered for the year, if they were to need that later, we would strongly suggest adding the home health rider for the low monthly premium cost. There are situations where home health care will be more liberally applied than Medicare. So there are situations where the Medicare benefit will not cover, or the scope of Medicare will not cover it, but under the state mandate, we will. So it is definitely something that they may want to take advantage of, especially as folks get older. Maybe they're homebound, need to stay home, and they need nursing or skilled nursing, rehab or whatnot in the home. So just keep that in mind, and that's really where that home health care rider is going to fit in. And then finally is going to be skilled nursing facility coverage. So if you have somebody who traditionally in Michigan or Minnesota, Illinois, whatever state you might be working in, generally they need 3 days of inpatient hospital stays in order to be eligible for the 100-day skilled nursing facility. In the state of Wisconsin, insurers are required to cover skilled nursing for the first 30 days without needing the 3-day requirement in the hospital. So they may not even have an inpatient hospital stay. Maybe they're admitted to the hospital for 24 or 48 hours for observation, which, as you might be aware, observation is going to be a Part B as in boy Medicare covered service. They may still be eligible for a skilled nursing facility care in the state of Wisconsin due to basically being certified that they need it, but not having that prerequisite hospital stay that Medicare itself and that most states do require. So that's going to be kind of the highlight on the state mandated benefits. Are there any questions or anything that's anyone you would like me to dig a little bit deeper on?
Nothing in the chat, Chris.
Awesome. Thank you, Michelle. Well, we are coming close to end of time. So let me go ahead and just kind of wrap up here and put a tight bow on everything. At the end of the day, at least WPS, we really do strive to provide that best customer service in class. And we really do want to extend that to our agents, because at the end of the day, our agents are going to be our customers as well. Myself, Michelle, everyone on our team takes a lot of pride in the support that we're able to give our agents and their members, and really want to be here to help you every step of the way, and really want to make doing business with WPS easy and worry-free. As Michelle always likes to say to me, no worries, no hassles, Chris. So that's my goal. That's what I like doing as a associate account executive. I know everything on this slide is not necessarily unique to just WPS, but I do want to let you know that we do honor all the traditional SEPs, IEPs, whether it's due to involuntary loss of group coverage. I know last AEP and most likely this upcoming AEP, there's probably going to be a lot of disruption in the Medicare Advantage market again. Plan exits, all that fun stuff. So we do honor all of those special enrollment periods, especially for plan exits, new movers, Medicare Advantage trial periods to get back into a supplement, loss of group coverage. And then for us specifically, our underwriting process is much more of a simplified underwriting process. Page 3 of our application lays out all of the health questions that we will screen for under our WPS Medicare supplements. With us, it's simply yes, no, pass, or fail. If they answer no to all the health questions, they are pass, and you can submit the application. That application is not going to be subject to further underwriting and will not have any further time waits in order to get approval for that client. So the good news is, in that moment, or at the very least the next day when they roll into the billing system, that they are good to go and active on their policy on the chosen effective date. So they don't have to wait to terminate their other coverage. You as an agent don't have to get proof of other coverage to have that other carrier retroactively terminate a policy. So it does make it a lot easier to work with us in that regard. They can make that quick pivot. Also, if you have somebody that is a fail, they have to answer yes to a health question, fantastic. Not that we don't want them as a client, but at least gives them the ability to go ahead and pivot to another policy that they may qualify for, or that whether it's a Medicare Advantage or maybe another carrier doesn't exclude the condition or the whatever the health issue is that maybe got them to decline. So at least you have immediate feedback for pre-qualifying or selling the most applicable product for that individual. Also, we don't operate for any conditions like tobacco usage, maybe disability under 65. Our rates are going to be standard across that block of business and across the company. So you're not going to have somebody who maybe was on disability at 63, now they're 65, suddenly their premium's $20 to $50 more a month. We don't have any preferred or standard ratings, so it just makes that a lot easier. And then also with the supplements, they're guaranteed renewable, so they can keep their policies as long as they maintain their premium. So the best news is if they are unhealthy now, maybe they have a chronic condition, they know that policy is going to be there for them and not have to worry about health qualifying for another one as long as they continue to pay that premium. Also, because our policies have a 12-month rate guarantee, rate adjustments only happen when they initially enroll, obviously the initial rate, and then every 12 months when they get the renewal. So as an agent, it does allow the book of business. It kind of cuts down that book of business. Also, too, because supplements are health qualified and guaranteed issue period driven, you don't have an annual enrollment period where you shoehorn all of your book of business into the fourth quarter of the year. So with your supplements, it does allow you to kind of work that book of business more throughout the year when the renewals come up. It can kind of stagger your business throughout the year. So you're not just focused on Medicare supplements in the fourth quarter. Obviously, that time of year, it's going to be very MA driven. Your time and efforts are probably really going to be focused more on that side of the house. So it really does clear that time in order for you to kind of maintain that book of business in your current clients. The way I like to put it with a Medicare supplement is you can set it and forget it. You enroll in the plan, as long as you continue to pay the premium, the policy is going to be there, and it's really not going to change from a core benefit standpoint. So a lot of the good things with supplements that maybe you're used to in Michigan or any other state is still going to translate into the Wisconsin market. So that terminates what I did want to cover for everyone today. Are there any questions at this point in time that I can address?
Nothing in the chat, Chris, but maybe Miranda, you have some, I'm not sure.
I do see Dennis went off. He went off mute. Did you have a question, Dennis?
Oh, no, I just wanted to say thanks for the time and information. I don't have any questions at this time.
Awesome. I do want to thank you for joining. Dennis, do you have any feedback for us? This is actually the first time we've kind of done like a Wisconsin or a unique Wisconsin rider. Is there anything that you may have found beneficial or may find, to add in just to make it a little bit more inclusive and everything?
No, I mean, I've really liked I thought a highlight for me was, just how low your average rate raises are. So I think that'd be very appealing to people because a lot of the clients who I have that are currently on supplement, a lot of the calls I get from them is like, hey, they just raised my rates by, 10, 15%. So just seeing that, year over year across a decade, it's that low. I think that'll be very appealing to people.
Thank you. I would agree. And I think we're seeing in the Wisconsin market, just to kind of cut open a vein a little bit, some of our biggest competitors have had double-digit 14 to 17% adjustments, either coming up here just happened, and then even going back to the fourth quarter. So we really have been able to kind of avoid that creeping premium, 15, 14, 17%, which we have seen quite a bit in the Wisconsin market. And I know Michelle did kind of a deep dive on loss ratios in the state. And if I recall correctly, Michelle, I know there was a few carriers that were above 90% and even a couple that were into the hundreds. So really anything above 80% loss ratio means that the carrier doesn't really have enough revenue to cover overhead plus claims and everything. So just kind of keep that in mind too. If you have access to like CGS or any other tool that shows loss ratios, you may see some of those being very inflated. And that's normally a really good crystal ball indicator of what carrier premium adjustments might look like here in the very near and maybe a slightly longer term future. I know we've been more into the low 70s, which for us has kind of been more of a sustainable place. So just kind of keep that in mind too when you compare maybe WPS and carriers that are going to be available in Wisconsin. So thank you, Dennis. I really appreciate your feedback. I'm really glad you're able to take the time and join us today.
Yeah, thank you for the info.
Oh, you're welcome. Michelle, you have anything else?
No, I do not. Thanks for touching on the loss ratio. I go nuts in the loss ratio, so we could have a whole session on that, but we're past time.
That's your
So
bailiwick.
yeah.
That's your bailiwick right there. So thank you, Michelle. You're awesome. I appreciate it. Miranda, unless you have anything else, I'm good.
And no, that was fantastic. I definitely feel well informed on how that works. That was a great job, Chris. You really clarified that perfectly. Thank you so much, Michelle, Chris. Really appreciate your time. Thank you for joining us.
Hey, you're welcome.